Up next in the symposium, you don't want to miss this one, what microcaps need to do to attract institutional investors. David Shapiro, CEO of B2I Digital, Alan Klee from Maxim Group, Maury McCoy, McCoy Associates, and Shawn Severson from Water Tower Research. Please join us in the symposium.
All right. Welcome, everyone. Thanks for sticking around on this afternoon. We should have a good conversation today. We got some really smart folks here who are in all different parts of the industry. To kick things off, I guess we should just start off with some introductions.
Sure.
I can go ahead and start. I guess I'm Maury McCoy, president of McCoy Associates. I'm what's known as a third-party marketer or a placement agent. Essentially, I raise money from hedge funds, raise money for hedge funds, investment managers, from folks like endowments, foundations, family offices, pensions, folks like that. And over the years, I've focused primarily on managers who invest in microcaps. So over the last 20 years, I've raised about $250 million for hedge funds focused on that space, and that's kind of part of the funnel where some of the money starts that eventually gets to the microcaps down the road. So.
All right, thanks. So, welcome everyone. My name is Shawn Severson. I'm co-founder and president of Water Tower Research. By background, I spent 20 plus years as a research analyst, equity research analyst, and started Water Tower Research 7-8 years ago now, which really is combined to create a new investor relations ecosystem for small cap companies, taking conventional third-party IR that you've probably seen or internal IR, but augmenting it with a sell-side research toolbox. So it's a coordinated effort working with investor relations. And the reason we do this is to supplement information flow, to create dissemination of information, access for all investors. As you all know, in the small cap world, it's a scattered group of investors, hard to reach, lots of them in many different places. So taking an approach that reaches all investors and provides access, and our job is to provide information to investors and helping the company communicate and direct engagement with investors as well.
Hi, my name is Alan Klee. I work as a research analyst at Maxim Group. Maxim Group is an investment bank that focuses on emerging growth companies. I started my career on the before I was a sell-side analyst, I was a buy-side analyst. I was a portfolio manager and analyst of a couple of mutual funds and hedge funds. So I was the guy who was buying the stocks of the companies. And then the last 10 years or so, I've worked as an analyst at a sell-side firm, an investment bank covering tech, media, telecom, and healthcare technologies. So I talk to a lot of the institutional investors with my research ideas, and I try to convince them, to buy the stocks in their funds. Thank you.
Mm-hmm. My name is, I apologize in advance. My voice is still at the event last night, but I'm hoping that I can get it back enough to get through today's panel, but glad to be here. My name is David Shapiro. I'm the CEO of B2I Digital. What we do is connect good investors with good companies through digital marketing. I actually used to work with Alan over at Maxim Group as their first ever chief marketing officer for the broker-dealer, where the CEO of Maxim had this crazy vision that digital marketing and capital markets could work together. You could use this digital thing that's catching on with a few billion people online, that it's a way to reach and amplify your message to investors. And it's not IR, it's investor acquisition. You message and tell and sell your story to the right investors with the right messaging on the right platforms. A new investor can come into your cap table and invest in your company. So that's why we're called B2I, as in business to investor digital marketing. Not B2B, not B2C, but investor-focused digital marketing. And look forward to talking with my colleagues here about how we can, how we leverage that to, reach the coveted institutional investor that everybody says that they want. And we'll go into what that means, what is an institutional investor, how each of us help to come to get the point where different kinds of institutions will actually want to talk to you and will actually be willing to take a stake in your company, because it is a journey and it is a process. And look forward to talking about that.
Yeah, speaking about that process, maybe a good place to start would be like a 500-foot view of how this comes together. I know, Shawn, your firm kind of does soup to nuts from investor outreach to investor onboarding. Maybe you could kind of talk about that process.
Yeah, so it begins with helping, small cap world, let's take the Russell 3000. You have 3,000 boxes of cereal on the aisle wall, right? How do you pick one versus the other? Begins with awareness. You have to make sure investors know a company exists. That's the first stage, right? That they know you're there, then understand what the company does, then engage and go through their process. So, taking a microcap company and small cap companies creates some unique challenges because there are a very diverse set of holders. You don't have a conventional, easy list to go to in your institutional investors, right? You can't say, these are the 10, these are the 15, these are the 20. You really have to cast a very wide net. So our process through that is to create good research and content for investors to digest, and then we judge the engagement levels with various investors, so we're able to target that way. But that's the process for, so many of the small cap companies is traditional. They go raise money, they may get sell side coverage, and then there's not really a carryover in engagement to reach a broad audience. So, I think it creates some unique challenges, but opportunities, like open access research is how we do it. We don't charge investors to read our research. So it creates more of a democratized access to information, fireside chats to see what management's saying and to read the research. So I think there are a lot of innovative, phrase that there haven't been a lot of innovative ways. Now we're looking at things like, the digital side of things and accessing investors. And the one thing I'll leave you with is no matter where you are, if you're at T. Rowe, small cap fund manager, or a day trader in your, at your house, you start with a Google search, right? It doesn't matter where you are. So what do you find online? What can you learn about a company? So helping companies create that digital footprint is part of the key things they need to understand and make it easy for investors to understand them, understand the investment thesis, and get behind it.
Yeah, I think I know one of the very first investment manager I worked with, president of the company, portfolio manager, but he insisted on putting research analyst on his business card. Because in this industry, he thought that research analyst was the most important job in the industry. And I'm sure you guys would definitely agree with that.
I certainly agree with that.
But, Alan, this is what you do all day. Maybe you could talk about some of the, the key metrics that folks look for when they're, analyzing these companies.
So one of the things is just that they give the information that investors need. So if you go to the website, it should be a requirement. It has an investor presentation. It has the news articles that you can get. It has an investor contact. And the investor presentation has to be concise. If it's a long book, if there's any of these slides that's like hurts your head to look at, like that's not going to work. So, so starting out with that, and then one of the most important things is who is the person you're investing in? Who's the management? What's their track record? I can tell, I remember I was working at a hedge fund, and the trader from the prior hedge fund that I worked at called me up and it's like, Alan, I need you to come with me. There's this company, you got to see this company. There's this guy named, and the name I'm going to say, I don't cover the stock, I don't have a public opinion on it now. This is all in the past. But he's like, you got to meet this guy, Brad Jacobs. He's presenting at this retail place, and it was essentially a bucket shop type retail place. And he goes there, and the guy, 3 times before, he created billion-dollar companies and then sold them. The latest one was United Rental. He just put $100 million into this company at the price that the stock was trading at. It had no coverage, but he was like a winner, like you wouldn't believe. It had a great business model, and nobody covered it. And you could see the picture. You could see what's going to happen. Like it's a bit, and he could explain it well. I brought him in to my boss at the place, and he could explain it simply. It made sense, and he's done it again. You can look at his stock as XPO, and I don't have an opinion. I don't cover it, but it's gone up. So if you can find somebody who's a winner who you trust, if it's a business models that have recurring revenue, I like to look for companies that I call small cap giants, where in their particular niche, they can actually have a barrier to entry and a large moat, pricing power, high margins. If you have low gross margins, one little problem kills you. I had this happen. So it goes on and on. I would say things like that. Yes.
And you end up having 2 minutes to tell that story to an investor, right? I mean, when they look at it, they go through it so quickly, and if they don't get it right away and understand those things you're talking about, they quickly move on. Yeah.
And what I'd like to add is people use the word institutional investor a lot, but no one really defines what that actually means. And in the current market, people think portfolio manager, big fund, institutional investor. But I try to broaden the term to be any professional investor that's advising or investing money for others is an institutional investor. And in today's market, if your market cap is 25 million, you're not going to get the PM, the portfolio manager, from a big fund to go into your stock. Got to work your way up from small retail, large retail, accredited investors, high net worth, family offices that have discretion to go into your stock and security. Don't go after the big funds. Yeah, get on the radar early, but they'll be great. Come back to us in 2 years when your market cap's $1 billion. You got to realize that there's a hierarchy of professional investors. Talk to RIAs, talk to brokers, talk to individual advisors, and they're the ones who will help you to get in with professional investors who can then get into your security. And you got to start with the dreaded retail and work your way up to the professional investors, into the family offices, into the smaller funds, larger funds, and that's how you attract the institutional investors, is by realizing what you can and can't do. You got to deliver on your business, produce results, get attention, get people engaged, and when that stereotypical portfolio manager sees your volume, your price, your performance, then they're going to come in. But you got to earn your way into that club.
Yeah, as someone who markets hedge funds, it's interesting. The rules for me are very different than these guys. Sometimes you go to a hedge fund website and you're lucky to find a phone number. Oftentimes the performance is behind a password-protected site. So I'm incredibly jealous of all the cool tools that you guys have. Particularly, David, I know that you have all these tools. I look at your website and you're like certified in every kind of social outreach. The different channels that you have are basically all the social media apps on my phone. Maybe you could talk a little bit about the different tools at your disposal and different channels and how you reach out to folks.
Absolutely. Like when I worked with my friend Alan at Maxim Group, people were like, "Oh, you can't do digital marketing to reach institutional investors." My answer back was, are they run by a person? Do they have a pulse? Do they have a phone? They are targetable by Google, by Facebook, Instagram, LinkedIn, X, Twitter, whatever you want to call it. You can reach institutional investors through digital marketing. There are two kinds of digital marketing: organic digital marketing, which is 3 buckets, and we all know them: emails, social media posts, and your website. And then there's paid digital marketing. Anybody will take your money: Google ad platform, Meta ads, LinkedIn ads, X ads. All those platforms have targeting options to reach institutional investors, RIAs, family offices, funds, by job title, by interest. Google knows what you searched yesterday, today, what you're thinking about, and they can show an ad to you on Yahoo Finance about your company. So you can get the attention of those institutional investors via very targeted digital marketing, organically posting and sharing with the right communities, and paying for ads to refine that targeting.
Yeah, I know when I put managers in front of like endowments and foundations, one of the first questions we always get is, where do you come up with your ideas? And almost to a manager, they always say, everywhere, like anywhere I can get ideas. They're on the message boards, they're on Reddit, FinTwit now. The financial side of Twitter is actually amazing. I can hop on there and I can talk with CIOs of major university endowments and we can have conversations. It is somewhat leveled the playing field. But it's also a meritocracy where if you're not, you're too pushy or anything like that, it's like, boop, you're also one click can get blocked. So it's a fascinating space to be in. Yeah.
I would just add kind of what Alan had said and what David had said about when you get to that investor, what is the simple message you're trying to get to them? Can they easily understand it and absorb it? And I think that's kind of what you were you were getting at here. What do you quickly pick up on the thesis? Is it easy to understand, right?
Well, I'll just say, when my first job as an analyst at a mutual fund, I tell you that what I did is what every analyst at a mutual fund does. You go into the portfolio manager's office, you pitch a stock, and he kicks you out and says you're an idiot. And then what you do is you have your spreadsheet where you have all your picks, and you show your performance, and you get all proud of yourself in your office that your performance is better than the portfolio manager, and you're smarter, and you feel good about yourself. Everyone does that. And it took me around 20 to 30 years to realize I was a complete idiot for doing that. What you really need to do is figure out how can you communicate to the portfolio manager effectively to get your name in. That's what matters. And that process is the exact same thing with all the companies here of how you have to communicate to get your name in. And I would just say with that, there was a portfolio manager at Gabelli I was friendly with, and he wrote a book called Pitch the Perfect Investment, of know who your investor is. If they like, and in the book it says if they like red umbrellas, don't pitch them a blue umbrella. You know, like just, know what it is. He had ADD, this guy who wrote the book, and he was so sick of analysts and companies talking and going on, like it's got to be concise. It has to show, the investment thesis, and I would say just buy that book, Pitch the Perfect Investment. It really, for everyone, it changed my world of thinking about how to do the job.
Yeah. Something that Shawn, Al, and I have in common is in everything that we write and put out there, at the beginning of any analyst report, beginning of any of our marketing content, we put the 3 or 4 key value propositions of that company. Why do I care? Why would I give this company $1 or $1 million? You got to get that story up front. People got attention spans of about 30 seconds if you're lucky. And so like what Shawn does using research as a marketing tool to engage investors is brilliant. Research reports, research content is a gold mine for content marketing. So the content that Shawn, we're talking about working together, Shawn and I, we make a great team. The content that Shawn creates and that we can then share with our audience of 520,000 investors who follow our community on BI Digital, share that content with our followers who love microcap companies. That's what's amazing. And really getting the story across succinctly, key points, and then when they are ready to dig in and learn more, let them dig in as much as they want to dig in. Go from the 4 key points to the deck, to the financials, to the filings, and let each person digest at their own pace. When they're ready to decide, they'll decide.
It's amazing how companies and professional investors sometimes speak completely different languages. In terms of you talk to a management team and they go, why don't people understand my business? Why aren't they? And they're talking about their business as they see their business as a manager and from the inside. And an investor looks at things in a completely different way. So one of the big battles and that you focus on has been from the investor relations side is helping take all of that sits at the company, that sits in the management's minds and their strategies and what they have publicly available as well, and making sure it's put into something that relates to an investor. And, I remember when I was an analyst, and I'm sure Alan relate to this at, a large brokerage firm, when I'd be talking in the morning meeting, I could tell if people put their pencil down or stopped typing, I was done, right? No matter what I was talking about at that point, I lost them. Because institutional sales force is sitting there, and I'm talking about this great idea, something that happened, and clearly, if I'm not messaging it right to them, they stop writing. And you're like, oh boy, I lost them this morning. I'm going to have to go back and do this. But that times 1,000 for public companies trying to communicate with investors is a consistent, ongoing battle that they have to fight.
So one thing that I do, I try to do it every time when I'm pitching a stock, and I learned this. I worked as doing investing at SAC Capital, and they trained you in a way of how to make money in stocks, and they were very good at that. And the process was, what's the disconnect in this stock? What is the market missing? What are the catalysts? What's going to change that? Because a stock could be cheap, but it could stay cheap a real long time. What are the catalysts to change that? And then what's the path to get there? What is the time frame? And if the time frame is, 3 to 5 years, what I learned also, it's worthless. What's the time frame in the next 6 months that can really, if there is, that can make that happen? And then what's the risk reward of if you're wrong, what's your downside and what's your upside? And so when I try to present companies to try to get in I always try to use that framework of as why this stock should be bought and by an institutional investor.
Yeah, I think, with the managers I represent, it's interesting because the world has kind of changed. So much of the market is being driven by quant strategies and algorithms and index funds just coming up and buying everything. And if you want to succeed as an investment manager, you do have to find some sort of differentiated view than what the market sees. Even sometimes different than the research reports out there and things like that. You have to come up with a differentiated view. And, catalysts are a big part of that. With all these quant strategies, they can only really look backwards, or they can kind of look at future earnings, but, those are a little hard to predict. But if a manager can come in, and it's really about the story, right? If there's a new factory that's being built, they may be burning cash right now, and it looks horrible in the numbers, but when they flip the switch, all of a sudden they're profitable. Or maybe they're spinning off a bad division or acquiring a new division that will add something to the bottom line. But it's interesting because so much of the manager's pitching institution on my side is storytelling. It's, do you believe the story? And will the management, to Alan's earlier point, be able to execute on that throughout time? And you can watch the story unfold and just have more conviction in these ideas.
And if I get one thought before we finish up, when an institutional investor is looking at your company, they look at, first, like we're discussing the story, do they want to get in? Well, they can only get into a stock and a security if they can get out when they want to get out.
Yeah.
So if your volume is not there, you have to work on getting the story out, building volume, building your base, and then they can get in and they have a pathway to get out should they change their mandate for their portfolio holdings. So just remember that. They're looking at it the long term.
Yeah, in the microcap space, there's a common refrain that sometimes microcaps are known as roach motels. I don't know if you remember the old ads, but roaches crawl in the box and they can't get out. And so some microcaps you can get in, but you want to be able to get out if things go wrong. So yeah, liquidity is a huge factor, especially for these small microcap managers who might be a little more concentrated. The managers I work with typically pick 10 or maybe 15 stocks. And so you don't want to be wrong. Yeah.
And I think, but that's why we're all here too, is in microcaps and small caps, the communication information is so inefficient and lacking versus, other more liquid parts of the market that have significant amounts of money and really smart people chasing after those companies and understanding them. When you get in the small and microcap world, the information flow is not good. It is, people don't know what's going on. There's a lot of room for good research in small cap, which I'd say is a little bit different than big thematic investments, whether it's the big tech companies or whatever you're looking at. But this in small cap, you really have a chance to individually dig and find things that are interesting in this market. And so that, it's what hopefully we're here to help companies do, but the opportunities are out there.
Yeah, if you put in the work, it's kind of like
Yeah.
you could be the second or third best analyst on a microcap within a few days.
Yeah.
But you could spend
The
a year
only
on
one,
Apple,
maybe.
and
Yeah.
it might be like the 50th best analyst.
Yeah.
So
And everybody knows the same things.
yeah, there's a lot more bang for the buck to play in the microcap space for sure.
Yes.
Yeah. Yeah. Well, let's see here. We're coming up. We've got a few minutes left.
One more one little trick that I do to, if you're talking to an institutional investor, and what we do with our marketing campaigns is we tag your website. So we know who visited your website. So you have a meeting on Monday, tag your website, they go look at your website. Then this thing in digital marketing called remarketing to an audience that are already engaged with you on social media, on your website. And then your next meeting is 2 weeks later. During that time, they will have seen digital content, social media posts, paid ads on Yahoo Finance, Bloomberg News about you 7 or 17 times. So that by the next meeting, oh, you seem familiar, you seem like you're out there, you're very credible. it's that qualitative perception of value in the marketplace. So that's something like how digital communication can really reinforce your ability to sell yourself into a portfolio manager's portfolio. So there's lots of ways to really combine the old school worlds of and the new school of using digital technologies to really make sure that people know what you're doing and you stay front and center in front of them, and you have to just keep communicating.
I'd be curious of the people in the audience, who, can somebody tell us, like a company you saw today, what was it about that company that got you excited and wanted you to do more? Anybody?
They need better company presentation.
All right, so you got to hire these two people.
Yeah, right? Yeah, I mean, we could probably take time for some questions. Yeah, if anyone has anything.
Any questions about Analyst, water tower research, digital marketing? We got it all covered here. We could probably field a lot of questions either now on stage or happy to talk to you afterwards as well.
Yeah, definitely. Yeah, go ahead.
Can you give us a sense of what a company would typically need to spend for the digital marketing? I've seen quite a few numbers and I just would like can you share with us your perspective on that? Monthly, say like a monthly spend.
Yeah. Do you want me to take that one, Shawn? So digital marketing has two components. Organic, like we have a community of investors that already follow us. We post to our 500,000 plus followers. Our email list is 31,000 direct investors on our email list. And then we can spend $3,000, $5,000, $10,000 per month. The ad budget is a variable expense that's passed through to Google, to Meta, to LinkedIn. And depending on how much exposure you want, the more you spend, the more you're going to reach. But you don't need to go crazy. A couple grand a month, and you can have a respectable exposure to keep remarketing your message to relevant investors. We can be very hyper-targeted as to reaching the right kind of investors that are looking at your stock and your comps. We put in those 10 comps into Google. It knows who searched those 10 companies. It'll show them ads about you as well. So as long as you use that budget well and wisely, a couple $1,000s can go a very long way.
And what's important today, too, is that this line between public relations, investor relations, what they mean in a digital world, we all want our information free, frequently, and in small bites, and we digest it that way. So when you think about, step one, like using, the digital targeting, it's on a broader basis to think about this because it really is an awareness in the beginning and then the engagement that comes from it. But like I said before, every piece of research probably starts with some search engine, and then from there it builds. So think about that when when you look at spends. If you're a company and you're looking at IRs, to think along those lines. Great content, great reach, to digital targeting, and then what are you showing them? And then, as Alan said, what do you find on your website, right? I mean, if you go onto a website and you've got financial filings in an old deck, and not much around, that investor goes away real fast, very fast. Before you even get a chance to tell them your story, you might have a great story, but they're not digging any further once they browse around for a few minutes on that page.
So is the spend, there are two different ways or two different opportunities to market a stock. One is a publicly held company already and you're looking for new investors to come into the company. And then you have say, Reg A plus offering where you're out selling a particular deal. And the numbers I've seen folks talk about as to what they would, quote, expect to spend and to market their Reg A plus, like $25,000, $30,000 a month in digital. So can you help talk to us about that?
Yeah. So under a Reg A, Reg CF, Reg D506C exemption, where you're doing digital marketing like e-commerce for investment, i-commerce. There, I find that the average return on ad spend is about 3x. If you spend $100,000 in ad spend, you'll raise another $300,000 in investments, is an average. If you got a really exciting story, you can get a 5x return on ad spend. But if you only spend $10,000, you're only going to raise $50,000. So it's a ratio of the ad spend to how much you bring in to that exempt offering that allows digital marketing to directly bring investors into a crowdfunding portal.
Thank you.
Awesome.
Thank you.
Yeah.
Thank you.